Well, Hans dropped us an email, and he's a investor in Mediclinic. Now, Mediclinic's chart caught my eye already quite a few times, and I actually like the chart because it looks like it's finding a base. It's almost like I can remember when gold was hovering around that level that nobody thought that it can ever bounce from the floor. Now, what happened then when it started to go, and this is what's always the case in chart. When a stock builds a foundation or a beautiful consolidation over many months. Now this consolidation started in 2019, and I mean, we now 10 months in the year, and that tells me that the share doesn't want to fall any further. Now let's just show you this consolidation, and then you will see why I'm a little optimistic about Mediclinic International. Remember, all these companies, especially the medical companies, are under huge pressure, and there's a lot of regulations that actually hamper their profits. But look at this. I mean, here's the 40-week moving average, this little red line. Then we've got this massive consolidation that kept the stock between 64.50 and 53.74 months. And now what do we see? Suddenly we see that the stock is almost on the brink of breaking above this resistance line. Now always remember, when a stock builds a foundation, and maybe over a year or 6 months, doesn't matter how long, usually I say above 3 months, 3 months plus. Sorry, if a stock breaks above out of that consolidation, you can bet your dollar that there's a lot of investors that may be held onto the stock for, let's call it 3 or 4 months, and then they will get to a point when it breaks, they will just say, okay, thank you so much, I just want to get out of the stock. And usually what you find is around this resistance line, there will be a push and say, yes, it's going to turn into support. No, it's going to remain a resistance. And when you see this sort of, let's say, fight around the support and the resistance level, if you've got the stock, just hold on. Just see if it comes back and go all the way down to the support of the consolidation. But if it breaks, remember, a lot of other companies will actually say to themselves that, listen, and I'm talking about fundamental companies, the big investors will say, but listen, maybe this company is starting to offer some value. Because the 40-week moving average have turned into a support, and it's breaking above this level of 64, 65. That would trigger the first proper buying signal for a medium to long-term investor that is looking at charts. And nowadays we've got a trend, and I see it all on the social platforms, and I see it from the emails that I get from our clients, that a lot of them are staunch fundamental investors. And they're starting to realize that charts offer a lot of good value to them if they just combine the two thoughts. So if you've got an idea that Mediclinic International can do well, and you want to buy it, the chart can give you the clue. Because remember, what is a chart? A chart is nothing else than the informed capital telling you what they think. So if they are thinking that the stock is going to go up, why do you want to think different? So that's why I say I like the chart of Mediclinic International. And what I like is this line breaks above 64, 65. Sorry, if the share breaks above 64, 65, let's just have a look at the target. First of all, I just want to use that little, there you are. There's the size of the consolidation, and if I just take it up and I project it upwards, where can it take the share to? 74 Rand 70 cents. And remember, that's on the first bounce. That is not even, you can say, when it starts to give us higher lows, or it gives us an inverse head and shoulder, or a falling wedge, or a flag formation. Nothing. It is just the first break out of this consolidation and take the stock higher. So I like Mediclinic International, and it looks like there's something on the boil here, and it can maybe go a little bit higher. Well, Hans, I hope that it helped you, because I know you've got the stock, and I think you maybe add some to that. But let's just give a stop loss, because remember, a stop loss is just to guide those that wants to protect their capital. And the first stop loss will be, of course, the 40-week moving average. That is 58.74. Below that, we can get nervous again. And especially if it 54.11 does support of this consolidation break 54.11, then you know the stock wants to go lower from here. Let's have a look at Bitcorp. Norrels asked us about Bitcorp, and he said to me on the email, listen, I'm a long-term investor in Bitcorp and I like the company. Can you maybe tell me what do you see on the charts? Now, let's have a look here. Well, this is Bitcorp, of course, a weekly chart, and if I look at the chart, it's actually holding up well, because, you know, if you look at a lot of the other companies, they really struggled over the last couple of months. But if I look at Bitcorp here, looks like there is some resistance around here. Let's just say, Knowles, let's just draw in a line here. There you are. Let's have a look here. Well, there you are. There's every time that it got there, now that is 300, let's call it 320 Rand. It got a sell-off, even there, 320. And now the share must decide. Does it want to remain above this 320.20, this overhang resistance? Does it want to remain above that? Or does it want to go higher? Now, if I look at the chart, it looks quite positive to me, because what I see here is the low, all the way some higher lows. It had a little bit of a pullback here, but look what it tested this 40-week moving average, and it bounced off there. I want to just have a look at something else. I want to have a look and see what the stochastic is telling me, because this share had a beautiful rally here, and I just want to give me a little bit of a chance here so that I can see. There you are. Well, look at it. It's the stochastic. This stochastic is almost in the 90 zone. So what it tells me is, and you can see here, every time that it got into this 90 zone, it gave us a little bit of a pullback. Even there, it gave us a pullback. There, you got a pullback. So Knowles, for me, if I look at the chart, it looks like that this level of 320.20 is holding the key. The big thing is now, if 320.20 can turn into a support, then you can say to yourself, whoa, what do I see? I see a left shoulder. I see maybe a massive head. I'm seeing a right shoulder. And then it can move up 340 and even go up to 370 if we project it to the top. Let's just show you where that projection is coming from. From the head to the neckline. And you just extend it to the top. There you are. And that will take it to 371. But once again, can you see that I use, let's call it a loose projection here. And I know there's a lot of technical analysts that wants to work out exact levels. Yes, we can do that with a candle and with even a bar line. But with a normal line chart, it's not that easy. So I always say to somebody, if you do a projection for yourself, always keep in mind that technical analysis, in actual fact, I think investment is not you can almost a set science. There's nothing set in the financial markets. One day it looks wonderful and everybody thinks that the share will go to 1,000 Rand, and the next day things turn around and the share just fell off a cliff. So there's nothing cast in stone on technical analysis. So if you've got a level of 371 or 370, when it gets close to that and you've got maybe your oscillator right at the top, or you get nervous, then just lock in your profit. And I do it a lot in the Aussie, and the guys that follow me with the Aussie, and they will see that I'm not greedy. I'm just getting to a point where I say, okay, I've got enough out of this trade. I like it. I usually go into 100-point sessions and I say, okay, I've got 100 points. The other day, in actual fact, I waited for 200 points and the market turned around 3 points. Can you believe it? 3 points from my target level. And what happened? I just closed the position because I realized that the market wants to turn around. It wants to go the other way. I did not get my 200 points. I took my 115 points, I think, 115, instead of 197. But it doesn't matter. The trade worked out for me. And the same with shares. I know with candlesticks, you can almost predict it 100% where it can turn. And you've got a nice tight stop loss. But sometimes you put your stop loss in and you will see that the share just goes a little bit below that stop loss. Trigger your stop loss and it turns around. That's why don't be too harsh on yourself. When you use technical analysis to maybe invest or to trade in, just say to yourself, where is the easy money? And take the easy money and go. And then you will have success. Otherwise, if you want to have a pinpoint place where you enter and where you exit, you usually find that you actually mess yourself around, and it becomes not nice to do that. The one guy that, well, the profession that struggles with technical analysis, they love it on the one hand, and on the other hand, they hate it. You know who's that? That's the engineers. All my guys that on the Algae group over all these years, that when they are an engineer, I always say to them right in the beginning, listen, don't be too particular. Don't wait for this and that to be exact at the same spot. Always remember, this is not an exact science. So for all the engineers, I know you guys, and I've got a few of them on my group, and when they get this, that it's not an exact science, they love it. So always keep in mind, don't be too harsh on yourself. Well, we're out of time. Sorry, I couldn't do the others. Enjoy your week, and we will chat again.